Good morning. We will take up now on to AS9, that being revenue recognition. See, the main source for generating income is the revenue. So, what is the time at which it should be recognized? In accounting, there are four important things that we normally be having, which I used to tell as recognize, measure, measure, report, and disclose.
So can
This
you
is
share the screen?
AS9 revenue recognition. Accounting would mean there are four stages that we have. We are expected to know about as how revenue is recognized. How revenue is recognized. As how revenue is recognized. See, first and foremost thing that we should remember that an entity transfers to the customer. This is entity transfers goods and services. So this being a customer. So the first thing is that there should be a transfer of goods and services and the ownership. There should be transfer of goods or services and the ownership to the customer. Two. Second important thing that you expect is that it should be capable of being measured. So when is that you recognize when there is a transfer of goods and services and the ownership and control. Ownership and control on the goods and services when you do, there is a point of recognition. You can see point of recognition. It is a point of recognition. Correct. Then it should be capable of being, it is capable of being measured. So I will put the question this way. Capable of being measured, question mark, yes and no. So even though a point of recognition is there, but when it is not capable of being measured, ignore. That is, do not account. If yes means point of recognition where there was a transfer made capable of being measured, go to step 3. Go to step 3. First and foremost thing, transfer of goods and services along with ownership and control when it is done. Next thing, whether it is capable of being measured, you just check up. If it is no, do not account at all. And when it is yes, go to step number 3. What is that in step number 3 we have? Is the consideration. Capable of being measured would mean that is consideration. Is the consideration is the consideration um, having any issue in recovering, or is the consideration, I will put it in a different way, is the consideration capable of being recovered? Yes, no. Is the consideration capable of being recovered? Yes means recognize revenue. Recognize only when recovery is possible, until such time do not recognize. So there are three stages that you have, Kavya. Number one, when there is a transfer of goods and services, where the ownership and the control when it is transferred, and when they are capable of being measured. Three, where recovery is possible, you should recognize revenue or else do not recognize. So you can say it is 3 by 3. What do you mean by 3 by 3? All the three conditions are to be satisfied. What are those? Transfer of ownership and control on goods and services. So, capable of being measured. And number three, only when recovery is possible. All the three conditions are to be satisfied, only then recognize revenue. Are you understanding? Say yes or no.
Yes, sir.
Right. Good. Now, to make this particular item easy for us, by what point of time they can be recognized? This chart given by the institute itself is sufficient. When it is goods, when sale has been, seller has transferred the property for consideration, transfer of significant risk and reward to the buyer. So people might ask this question, sir, ownership and control would mean what, sir? So when you say ownership and control means risk can be returned or transferred. Risk and the return would mean, in this case, return would always be referred to as risk and the reward. Okay. Then rendering of services, proportionate completion method that we have already done it in AS7. Proportionate completion method would mean performance consists of execution of one or more act. Practically, revenue is recognized on SLM basis. This is what accounting standard is giving. Completed service method, generally performance consists of execution of a single act. Revenue is recognized when the final act is completed, and services are chargeable. I have given advertisement when I have given advertisement as an example. I collected the money as an agent, and when is that revenue can be recognized? Only upon completion I can take it up. Until such time, even if money is collected, revenue is not to be recognized at all. Whereas proportionate completion method, how proportion has got to be done, physical measurement method, survey method, and formula method. So whatever may be the scientific basis that you use, you can take it up only to the extent that they have completed during the period as your revenue. So these are the three things that you have. So number one, sale of goods would mean when there is a transfer of ownership and control. What do you mean by that? Where there is a transfer of risk and the reward incident to the ownership of the asset when it is transferred to the buyer, then transfer had taken place. Whereas in the case of services, there are two methods that you have. One is proportionate completion method, like in the case of AS7, the other one being completed contract method, where I've explained in AS7 as when is that you consider that it is all over. When it is over would mean certain cases only when a particular performance is getting over, you can take it up. Otherwise, you cannot take it up on a proportionate basis. Then, apart from this transfer of goods and services, we do have something called as interest, royalty, dividend, etc. What do you mean by that? We generate income in some of the cases where interest is to be considered as our income. So, our company may be a finance company. So, if such be the case, how interest has got to be recognized? So, interest is to be recognized on time basis. Even if interest is collected in advance, we cannot be taking it up upon collection. So, only when the period is getting over, you can recognize. Otherwise, you should not recognize at all on time basis. Royalties, revenue is recognized based on the terms of agreement. See, why they have just put terms of agreement is that sometimes the royalty is payable on production. Sometimes royalty is based on sales. And sometimes royalty may be based on certain completion of performance. So there can be different bases on which royalty can be taken up. So therefore, it all depends on how the structure is made in the agreement. Dividend. Dividend is recognized when the right to receive the payment is established. So now let us just summarize all that in our notes. Okay, number one, revenue can be generated on account of goods, services, and others. Goods upon transfer of ownership, upon transfer of ownership, or I would just say upon transfer of risk and reward incident to the ownership and control. Upon transfer of risk and reward incident to the ownership and control. Here you have completed contract method. Next one is proportionate completion method. Others, interest, royalty, then dividend. Interest on time basis, royalty based on agreement such as A, production, B, sales, etc. Dividend, when there is a right to receive arises. These are the point of recognition. Point of recognition would mean This is the point. In all these cases, 2 and 3 will always be there. A recognition point, that is stage 1. So in all these cases, stage 2 and 3 are common. Are common. That's it. So in fact, AS9 is getting over with this many time only. So if we would have started see about say 6:20 in the morning or around that particular point of time, only in 15 minutes time we have just completed. Now let's just go through what institute it just communicated. AS9 is mandatory for all enterprises. AS9 deals with the basis for recognition of revenue in the statement of profit or loss. The standard is concerned with the recognition of revenue arising in the course of ordinary activities and sale and rendering of services, and the use by other enterprises resources yielding interest, royalties, and dividend. Correct? No. So revenue from which and these items will come under different accounting standards, and these items will not come under this particular accounting standard. They say when sale of goods will be taken up only upon delivery, where you are transferring the ownership and where significant risk and reward incidental to the ownership and control is transferred. For rendering of services, you have two different methods, proportionate and completed contract, which we have already discussed when we have discussed AS7. Income from other sources on time basis, and in the case of royalties and all that, based on the agreement. Dividends, where owner's right to receive the payment is established, and that they have put up. And when there is an uncertainty associated with that, after recognition, we are expected to provide for that. So now that particular point we are going to discuss. So where it is recognized, it is measured, and it is consideration capable of being recovered, and revenue got recognized. See, after recognition, if there is a doubt in collection, so this is the last point. After recognition, there is a there is an uncertainty associated. There is an uncertainty associated in the collection or recovery of consideration. Then what is that we should do? So, if you have uncertainty associated in this, there are two possibilities that you have. One is you can reverse. The other one is that you provide. So please understand one important thing. This is not to be tried at all. Not to try at all. That means revenue recognized is recognized. Not to try. So reversing, not an option at all. Not an option at all. When there is an uncertainty associated. After initial recognition, there is an uncertainty associated in the collection or recovery of consideration would mean. So do not try this option at all. Reversing is not possible. You have to provide. So example, provision for bad and doubtful debts. You are expected to provide in your profit and loss account regarding the uncertainty associated, and do not reverse the entry that you pass for recognition. Once passed means it is passed. It is not in India. Anywhere in the world, it is like that. Once recognized, we are not supposed to reverse at all. So therefore, you take all steps to recognize properly. Once it is recognized, it should not be reversed. Now, you just understand what exactly they want to communicate here. Effect of uncertainties on revenue recognition, where the capability to assess the ultimate collection with reasonable certainty is lacking at the time of raising any claim. Revenue is postponed to the extent of uncertainty involved. This is what we have just said. What is that we have said? Recognize only when recovery is possible. Until such time, do not recognize. That is what we are saying. When the certainty relating to collectability arises subsequent to the time of sale or rendering of services, it is appropriate to make a separate provision to reflect uncertainty rather than to adjust the amount of revenue originally recognized. I told you not to reverse. An essential criterion for the revenue recognition of revenue is that the consideration receivable for sale of goods, rendering of services from use by others of enterprise reasonably determinable. So this is, they are talking about the second one. When such consideration is not determinable within the limits, revenue recognition is postponed. So determinable is what we have said as being measured. Determinable. So it is postponed. Disclosure. An enterprise should disclose the circumstances in which revenue recognition has been postponed pending the resolution of uncertainty, significant uncertainties. We are expected to disclose certain things where they are not in a position to recognize the revenue for want of details. So I can give an example where we have sent a consignment to Malaysia. While the cargo is on transit, we understand that there is an imposition made by Malaysian government on their entities. They are not supposed to send any foreign remittance. They have imposed such restriction. Would mean, see, at the time of dispatch, it was there. I have recognized the revenue and passed the journal entry while that was in transit. Or even after reaching also, you get a sudden scenario where you cannot collect. Would mean, so you should only be providing, where you should only be providing, and the revenue, what you have recognized, can never be reversed. Capable of being measured would mean sometimes what will happen is that it may be or it may not be capable of being measured. Would mean you can postpone, do not recognize at all. Say sometimes what will happen is that consideration we would not have determined at all. We would just say, okay, you please start the work, definitely I will pay. But at a particular point of time, how much is the work that got completed, we would not have measured properly. It may not be capable of being measured. So therefore, you do not recognize. But you disclose this fact that we have done so much of work, but we could not recognize. And those items of cost is very much incurred and debited to P&L account. So that sort of disclosure is what you are expected to make. Is that clear? So I
Yes,
would
sir.
say less than half an hour we have taken up. Now let us just take up illustration number one. Kavya, could you read out illustration number one?
Yes, sir. The board of directors decided on 31st March 2x2 to increase the sale price of certain items retrospectively from 1st January 20x2. In view of this price revision with effect from 1st January 20x2, the company has to receive rupee 15 lakhs from its customers in respect of sales made from 1st January 20x2 to 31st March 20x2. Accountant cannot make up his mind whether to include rupee 15 lakhs in the sales for 20x1 to 20x2. Advice.
Okay. See, board of directors on 31st of March X2, they have decided to increase the selling price for certain items retrospectively from 1st of January X2. When they have decided for a deliveries that they have already made, they wanted to increase the price now. Now the accountant has got a feeling as whether this 15 lakhs should be taken up as revenue or what. What are the three important points that we have got to note? Whether there was a delivery made, whether transfer of ownership, whether the risk and the reward incident to the ownership and control were transferred. First step. Second one, whether it is capable of being measured, whether there is an element of uncertainty associated with the recovery, or is the consideration recoverable. These are the 3 points that we got to remember. These are the 3 points that we got to remember. Now, which one of these three is doubtful, or whether all the three conditions are beyond the doubt? Kavya, could you tell? Is there any
No, so
point of doubt you have?
first condition is met of transfer and ownership, and the second is also met. It is capable of being measured, but I think the last one is not met.
Okay.
Where
Because unilaterally, when you have just raised a invoice or a debit note on them, see, normally what happens is that once an invoice is raised, when there is a correction, when it is to be incorporated, normally we do not withdraw the document. We will send additional document which will have the impact of increasing or decreasing. When it is likely to increase, we will send a debit note. And when it is capable of getting reduced, we will put opposite document, that being credit note. So once a document is released, then we are not expected to take the document and then make correction to it. So corrections are welcome, but not frequently. And that should be done through a separate document to have a separate track regarding how much is the addition or deduction that they are making. In this particular case, they would have raised 15 lakhs debit note. Now the question is that whether the customer would be interested to pay for this. Say, for example, I am going on a two-wheeler. So, Kavya, are you using two-wheeler?
no, sir.
No. Okay.
No,
How about mom?
no, sir.
Dad? No
Sir,
two-wheeler.
we use four-wheeler. No, sir.
You no two-wheeler nearby buying and all that.
Sorry, sir.
Nearby shop and all that, you take only car.
Yes, sir. We don't use two-wheelers.
Okay. Imagine four-wheeler only. What is a four-wheeler you are having?
Sir, a Skoda.
Skoda. Okay. You take Skoda and you fill fuel in a particular fuel station. And the manager there knows your dad. He's telling, what's the name of your dad?
Sir, Mr. Deepak Arora.
Deepak Arora. So he is just calling Deepak for whatever fuel that you filled from January to March. I'm going to increase it by 2 rupees. What will be the reaction of Deepak? Will you be happy? Okay, you are just racing, so therefore I will pay. No customer in this earth will accept for any revision which is coming up later, which was not agreed upon. Correct? Are you understanding? See, you just understand
Yes.
as how it runs. So, therefore, the last point, no customer will agree for revision on a retrospective basis unless it was initially agreed upon. See, sometimes it may be possible. How come? Supposing our company is a electricity company, Maharashtra Electricity Corporation, Tamil Nadu Electricity Board. So where I am giving electricity for a particular contract, contract will be there only for 2 years. Road construction, bridge construction for which I require electricity, I provide electricity. But there at the initial stage, I will tell very clearly, I will supply at this particular price, but this is not final. Final price I will tell you later. So take the electricity now and any change in the rate, tariff, you got to pay later. The contractor is accepting, yes, okay, I will agree. So at a later point of time, when I am revising it, where I am raising a debit note, now the customer cannot be telling, no, sir, what you have initially agreed should be agreed. It should be final. Can you do like that? In that particular case, yes. Because initially itself, it was conveyed that it is done only on a provisional basis. A revision is likely to come, and it is all informed well in advance. So, therefore, there is no confusion at all, and any increase in the amount has got to be recognized. But in this particular problem, there is no such information regarding any revision for which an advance notice was provided. No. So here the company decided to increase the sale price of certain items retrospectively from 1st of January would mean you are giving customer a shock. They will not agree. So therefore, there will always be an uncertainty associated with that, and thereby this 15 lakhs can never be considered as a revenue recognition. Price revision was affected for the period X1, X2. As a result, the company stands to receive in respect. If the company is able to assess the ultimate collection with reasonable certainty, then additional revenue arising out of them may be recognized. They have never said it should not be recognized, it should be recognized. They have put it out only upon a condition. Only upon a condition it was communicated. Is that okay? Are you clear? So, how will you write under examination conditions? How will you write?
Sir, in the three steps.
Yeah, that is why I told you we should always be having a template. A, transfer made. B, consideration measured. 3, collection possible. Yes, yes, yes. D, revenue recognition is possible. This is number one. Number two, yes, yes, no. Not possible. Will you note like that?
Yes, sir.
So, however, this is only a working notes, but you are expected to write it in words. Are you understanding? You keep this as working notes.
Okay, sir.
See, I will take 2 minutes. I will complete my morning tea.
Yes, sir.
What did you had?
Sir, nothing as of now.
Which place of Mumbai you live?
Sir,
You
Navi
told, but I have
Mumbai.
forgotten. Navi Mumbai. Navi Mumbai?
Yes, sir.
Where is your college?
Sir, it's in Kharghar.
Kharkar. How many children are studying in the college? Roughly, approximately.
Uh, Sir, I don't know about the whole college. In my class, there were around 50 to 60.
What is your college time?
So now it's over. Just now it got ended, but we had different timings for different semesters.
Oh, ho. How many semesters? You have completed all the 6
Yeah,
or
yes, sir.
only 2? Hmm?
Six, six, six.
6. Okay. So this is the way you got to answer to this question. 2. So now take the second one. Please read second one.
While Limited used certain resources of X Limited, in return, while X Limited received rupee 10 lakhs and rupee 15 lakhs as interest and royalties respective from Y Limited during the year 20x1 to x2, you are required to state whether and on what basis these revenues can be recognized by X Limited.
So Y Limited use certain resources of X Limited. So Y Limited is the customer and X Limited is the vendor. In return, X Limited received 10 lakhs and 15 lakhs as interest and royalties from Y Limited. Correct? Y Limited paid to X Limited 10 lakhs towards interest and 15 lakhs towards royalties. You are required to state whether and what basis these revenues can be recognized. So simply to say on what basis interest and royalties are to be recognized. Already we have made a note. Can you tell what are the basis on which interest and royalties have got to be taken up?
So, interest is taken up on the basis of time when it is received, and royalty is will be based on the agreement.
Based on the basis given in the agreement. So interest on time proportion basis, royalties on accrual with terms of relevant agreement. So they are asking us whether they should be recognized. See here the question stated whether and what basis revenues can be recognized. So illustration number 2. So interest on royalties. Number 1, base on time basis on base given in the agreement. Let us have a positive note. So recognize 10 lakhs and 15 lakhs. Recognize 10 lakhs and 15 lakhs. Okay. Then next. Illustration
Okay.
number 3. Is that okay?
Yes, sir.
Illustration number 3. Can you read illustration number 3?
A claim lodged with the railways in March 20X1 for loss of goods of rupee 2 lakhs had been passed for payment in March 20X3 for rupee 1.5 lakhs. No entry was passed in the books of the company when the claim was lodged. Advise P Company Limited about the treatment of the following in the final statement of accounts for the year ended 31st March 20X3.
Right. Tell me what is that you will be doing. A claim was lodged with the railways in March 21 only for loss of goods to the extent of 200,000. And it was passed for payment only in March 2023 for 150,000. No entry was passed in the books of the company when the claim was lodged. So they are asking what is the treatment in the final accounts for the year ending 31st of March X3. So whether can you just consider this matter as prior period item, matter related to one or more previous years affecting the current year's profit and loss account, arising on account of error or omission, arising on account of error or omission. Can you consider this as prior period item?
Oh, yes, sir.
Can you just do that? Or can you say, no, it cannot be considered as error or omission because by March 21, when they have lodged for loss of goods, they have understood that they have transferred and even if it were to be loss of goods, they have lost the control on the goods. Two, capable of being measured, yes, capable of being measured because through railways only they are transporting. So uh, even though the customer may not be penalized, but you have transferred it. So as if goods were transferred to customer, it took place by that point of time. Capable of being measured, yes. Third, by that point of time, were you having the certainty of collection? So answer to that question will be in the negative. You would not have had the right to collect, though you lodged, but the right of collection is will happen only upon the other party accepting. So until such time, you would not have had the opportunity to account, so that you cannot say that you missed out. See, when it is that you consider that it is missed out, I had the opportunity to account, and when I failed to account, then I have omitted the transaction. When I'm not getting the eligibility to account at all at that point of time when lodgement was made, I cannot consider passing no entry as omission. I am not supposed to pass journal entry. I did not pass journal entry, which is a correct treatment. How not passing journal entry could be considered as omission? Therefore, therefore, it cannot be considered as omission. Therefore, it is not prior period item, but it should be recognized only when there is a certainty of collection, only to that extent of amount that can be collected. You can recognize revenue. Until such time, this cannot be accounted. Therefore, not accounting when lodgement was made, when it was lodged, cannot be considered as omission, cannot be considered as prior period item, and it should be recognized for recovery only by March 20x3. Are you understanding, all of you? Kavya, are you clear?
Yes, sir.
Not a prior period item, not a prior period item as per AS5. Why? Reason is that related to affecting current year's profit and loss account is correct. Affecting current year's P&L account is yes. Related to one or more previous years also correct. See, arising out of error or omission. No. How? Company did not get opportunity to record because there was what? Because there was no certainty of collection. Company did not get opportunity to record because there was no certainty of collection by March X1. No entry can be passed. No entry can be passed by March X1. Such act of no entry passed cannot be taken as what? Omission. Such act of no entry passed cannot be taken as omission. Then what is omission? Then what is omission? So what is the difference between starving and fasting? Kavya?
Sir, starving is when we want to have food and we can't have it, and fasting is from our own will.
Huh?
So we fast on our own will do from our own wish, but when we want to have food, we can't have it. We starve.
Say, starving when I have no food. On the roadside, you find beggars there, whether they are fasting or starving.
So starving.
There are days on which elders you find they go for fasting. What do you mean with that? They have everything, but you've chosen not to take. Same way, here also, I have no opportunity to pass journal entry. Therefore, not passing journal entry is correct. That cannot be considered as omission. Are you understanding? Are you in a position to correlate?
Yes, sir.
So, I will put it this way just for the sake of remembering. Why I am telling is that you can remember through these examples starving and fasting. Starving, no food there. Fasting, so no eating. Here, food is there, no eating. Correct. So, which one of the two, starving and fasting, which one of the two is omission?
So starving.
No, fasting. I'll tell you how.
Yeah.
Omission means,
Yes.
omission means entity is supposed to pass entry, but failed to or preferred to, or I will just say preferred to, failed to pass entry, or preferred not to pass entry. Entity is supposed to pass entry, but failed to pass entry or preferred not to pass entry. That is omission. Here I say act of no entry pass cannot be taken as omission. In fact, it is the correct treatment. They have preferred to postpone. Are you understanding?
Yes, sir.
Entity gets the right first only when the claim is admitted in March X3. Entity gets the right first only when the claim is admitted. So, until such time, recognition of revenue got postponed. Are you understanding, all of you? This matter is to be disclosed. Remember that when we were discussing about the disclosure aspect, this is the item. So, fasting, no food is there, no eating. Sorry, fasting is food is there, no eating. This is like omission. Yo, here, this is natural course of action. Are you understanding?
Yes, sir.
Now, please just read the solution.
AS 9 on revenue recognition states that where the ability to assess the ultimate collection with reasonable certainty is lacking at the time of raising any claim, revenue recognition is postponed to the extent of uncertainty involved. When recognition of revenue is postponed due to the effect of uncertainties, it is considered as revenue of the period in which it is properly recognized. In this case, it may be assumed that collectability of claim was not certain in the earlier periods. This is supposed from the fact that only rupee 1.5 lakhs were collected against a claim of rupee 2 lakhs, so this transaction cannot be taken as a prior period item. In the light of AS5, it will not be treated as extraordinary item. However, AS5 states that when items of income and expense within profit or loss from ordinary activities are of such size, nature, or incidence that their disclosure is relevant to explain the performance of the enterprise for the period, the nature and amount of such items should be disclosed separately. Accordingly, the nature and amount of this item should be disclosed separately.
Are you clear?
Yes, sir.
All the points we have covered, this matter has got to be disclosed. And we are talking about as not a prior period item. Correct? Remember that. Not a prior period item. Why?
Sir,
Yes, tell.
sir, because there's no mention they from their own willing did not record that because it was not in error.
No, it is not an error because it was not certain. So, therefore, the correct treatment itself you have to postpone. That is what you have to understand. It is not that they have failed to record. They have preferred not to record because certainty was not associated. Understood?
Yes, sir.
Yes or no?
Yes, sir. Now understood.
Can you just explain? So, can you just explain what I mean? So, I take this as a very good question. So, I would like to keep the videos on, and why don't you explain? Will you switch on the video and explain so that I can see the understanding clear?
Yes, sir. Just a minute.
Ah,
Sir, so since the collectivity was not
ah. Are you
certain,
explaining now?
yes, sir.
Put your videos on. Okay, good, good. Mm, mm. Yeah, tell.
Sir, so since the collectivity was not certain, they decided not to record the entry, and therefore it will not be considered as a prior period item.
Mm. So, for prayer period item, what are the templates? What are the items that you should have in your question? How you um, deduce or how you bring out a logical conclusion? Can you just explain from that stage?
So, for a prior period item, the item should be related to current year.
It should be
It should
affecting the
be of
current year's profit and
yeah,
loss account.
it should be affecting the current year, and it should be related to previous year or
Mm,
any of the previous years, and it should there should be an error or omission
correct.
there.
Right. Why it is not prior period item in this case?
So because there was not any error or omission, but they decided not to record the amount because it was not certain that they would receive it or not.
Okay. So therefore, not accounting is a proper choice.
Yes, sir.
So therefore, if somebody is to tell that no entry was made, you cannot come to a conclusion that it was a omission. So not recording it on their own choice cannot be considered as omission. Therefore, it is not a prior period item. And the same has got to be accounted as revenue during the current period. Is that okay? Are you
Yes,
clear?
sir.
Right.
Yes, sir.
You can switch off the video. Because this problem I consider as a very good problem. I thought your explanation will add more value to it. Okay. Now, please take up on to next illustration. Illustration number 4. Could you read out this?
In the year 20x1, x2, XYZ supplied goods on consignment basis to ABC, a retail outlet worth rupee 10 lakhs. As per the terms, ABC will only pay XYZ for the goods which are sold by them to the third party. Rest of the goods can be returned back to XYZ and ABC will not have any further liability for these goods. During the year 20x1x2, ABC has sold goods worth rupee 5.5 lakhs only and rest of the goods are still lying in its store which may get sold by next year. Advise XYZ how much revenue it can recognize in its books for period 20x1 to x2.
See here, XYZ Limited sent goods on consignment basis to ABC, and the item is worth a million. And ABC will pay XY only when goods were sold to the third party. Rest of the goods not sold can be taken back to XYZ, and ABC will not have any further liability of for these goods. So therefore, the relationship between XYZ and ABC is not that of a vendor and a customer. So here, what they cannot sell, they will return, and they do not assume any liability for the goods that they have taken and not sold. So therefore, the relationship is that of principal and agent. And during X1, X2, they have sold goods worth 550,000, and rest were still lying in store. Advise XYZ Limited how much revenue it should recognize. They should recognize only to the extent of ABC selling goods to the worth of 550,000. So now let us just try as how you can bring out the answer with clarity. So XYZ is a company and ABC is another business house, and you have customers. So goods are sent here 1 million rupees. So ABC is selling to customers 550,000 rupees worth. Say point number one, transfer of goods and services by XYZ to ABC do not result in transfer of goods and services by XYZ to do not result in change of ownership and control. That is, there is no transfer of risk and reward. So there is no vendor customer relationship. There is principal agency is present. There is no vendor customer relationship seen. There is a principal agency relationship present. Point of sale is When ABC sells to ultimate customer. The question is only on that. How much revenue will be recognized? That is only rupees 550,000. Balance will be taken as closing stock. Okay. Are you clear?
Yes, sir.
Kavya, could you just read this solution there?
Yes, as per AS9, for consignment, risks and rewards are not transferred to the customer on just delivery of the goods, and no revenue should be recognized until the goods are sold to a third party. Therefore, XYZ can recognize revenue of rupees 5.5 lakhs only.
Okay. Are you understanding that our quality of answer is much better than what institute is providing? So when you
Yes,
have
sir.
clarity on the subject matter, you can bring much better answers. Okay. So this is what you have as the correct answer for illustration number 4. So with that, we have just completed the initial discussion of AS9. So we will take up additional discussion on there is additional problems on AS9 later when we have all other accounting standards ready. So far we have completed AS4, AS5, AS7, AS9 and AS29. So we will stop here for recording purposes and we will resume with new accounting standard. Is it okay?
Yes, sir.
So it is only recording getting stopped because I wanted to edit exactly at the completion of AS9.